point within what within the Ministry of Finance in Samoa, and she's the acting CEO of the Climate Resilience Investment Coordination Division within the Ministry of Finance in Samoa. As per the agenda for this particular virtual learning episode, we will also like to invite Carlos Lee Moresi of PIFS, the Resilient Development Finance Advisor, for setting the scene and also giving a brief refresher on the virtual learning episodes 1 and 2 that were held earlier and very successfully well received, and also link to the objectives of this virtual learning episodes for this particular session. And he will also briefly talk about the common risk retention instruments in the Pacific. So on that note, I would like to ask Lee to come in. But just before that, I would say that the presentations today by Tuvalu and Samoa would focus on their approach and what they have been doing in terms of risk retention. And over to you, Lee. Thanks.
Thank you, Christian, and I really welcome colleagues, participants who are on the call. I really want to say thank you for joining the virtual learning today. I've got my slides being shared by Sharon Jale. So just really on the first question is why have a disaster risk financing series? Next slide, please. Next, Jale. Thank you. Yeah, so really for those of you who are part of the Disaster Risk Financing Technical Working Group, I'm sure the discussions in formulating the work plan derived out of the Technical Working Group's operating framework. The framework is based on the 4 strategic goals, if you like. I don't know why the slides are jumping around, but anyway, I'll continue. Really based on regional coordination of DRF, knowledge brokering, the private sector engagement, and enabling environments for DRF at the national and regional level as well. So based on the discussions, was decided that a virtual series is one way of bringing to the regional participants and national participants the importance of DRF, like Christian mentioned right at the start. So to have a renewed regional effort to support Pacific Island countries with strengthened financial protection against disasters. And there's also a need through the working group to strengthen the multi-stakeholder approach, both at the national and regional levels. Next. So noting that there are core principles DRF, I mean, we also have to distinguish between climate risk financing and disaster risk financing. They might have some overlaps, but they're also quite distinct. For DRF, obviously there's some 4 principles on which DRF is based, one of which is ensuring the timeliness of funding, noting that when disasters hit, you don't currently wait around for assistance to arrive. And for assistance to be mobilized, usually requires financing or funding. Second principle is that there has to be appropriate instruments relative to the risk and the potential losses from the. So there's a principle called the layering of risks. So obviously there's high, low, and medium. No one instrument can actually cover all potential risks. So there's an absolute need to layer the financing instruments relative to the layers of risk. Next. The other principles obviously ensure that they're tailor-made, noting that there are different risk contexts, different operating environments. So DRF solutions need to be tailor-made for the context and ensure that money reaches the beneficiaries in the most efficient way. I think the PICAP program is actually pioneering some delivery methodologies through the use of technology. But again, the word contextualize is very important, because you might rely heavily on technology, but yet when disasters hit, sometimes the infrastructure for communications might be down. So the investment in technology may not be working such times. So it's all relative. And then principle 4, to make sure that financial decisions, you have to have the right information. There's a very important link between the DRF instrument structure, and also in terms of the information and data that fit into formulating those instruments, and the decisions to take, which particular instruments to adopt. So related to the risk profiles, the frequency, all that stuff that's related to risk management. Next. So with that said, obviously there are, we can categorize, of course, there's so many different disaster risk instruments out there, but we can pretty much categorize them into certain categories. Obviously, there's specialized instruments really to prepare, to support preparedness. And the last virtual learning series, we spent a bit of time talking about anticipatory financing in action and forecast-based. This is really a modality that evolved out of the humanitarian response area, but it has gained momentum. It's actually starting to be mainstream, and the importance of preparedness. And obviously, a very big part of this is actually the quality of the data that fits into the information to when do you actually trigger anticipatory action. So that's very important. Risk retention, we will talk about today. And it's really about, in the most cases, the national governments taking on the risk themselves and having some instruments to be able to respond to disasters. And they all have their own rightful place to utilize them, depending on the disasters and the nature. Risk transfers, I think there'll probably a future episode on that. And it's really that the most common example of risk transfer is insurance, either through indemnity insurance or parametric insurance. And of course, we have the international emergency funds. The UN has the Central Emergency Response Fund. There are several others, and they all play an important part in responding to disasters. Next. So, in terms of just to put that, or what I've just said in the previous slides, into a graphical representation. If you look from the left-hand side, as you look at the screen, down the bottom is the high frequency events, but low severity. And at the top, it's the low frequency, but high severity impact events. So as you move across, so obviously risk transfer sits around the middle. It can cover moderate type events, to high, moderate to high risk transfers, like insurance. As we move to the blue square there, contingency financing, like the KTDO World Bank instrument, that has played quite an important role in the Pacific, and is widely used as well by IDA qualified members. And then you move to the other end, we have the green square there, green box, and we're talking about national instruments, national budgets. And they can range from very low severity impact events to very high, depending really on the economic and financial situation of countries. Next. So in terms of a quick recap of the previous series, this is the third in a running series. But in addition to that, there was also one specific episode for the media. We identified the media as an important partner in ensuring increasing awareness on DRF and in disaster risk reduction generally. So, and it was very positive feedback, and I think they've actually been requesting more specific targeted episodes towards the media. And we also have to ensure that, so one is actually getting awareness, and also ensuring that the information they do put out to the public is accurate, and that we don't unnecessarily build up false expectations, and that we actually give the right information to the public. BLE1 focus on the overall DRF landscape in the Pacific, and is really the basics of DRF, pretty much what I've covered in the previous slides today. Like I said, BL2, anticipatory action and forecast-based financing. Today, we will focus on risk retention. If I go to the last slide, please. Thank you. I don't really want to talk too much about the today's episode, Scott, I'll leave that to the experts that we have in the call. And again, thanks to Tuvalu and Samoa for coming on, and I look forward to hearing from them about their experiences with their own national funds. So, but basically, really, there's some issues. Really, when you first start to establish the national funds, so when the decision is made, and what leads to making their decision, the formulation, the structures around it, the legal framework necessary to establish such funds, legislation that might be required to pass, and that's also related to capitalization. And I also put there recapitalization. I think there's initially when some of these funds are set up, national governments put in their own funds from national budgets, but then once those funds are utilized over time, it becomes an issue of recapitalization. I think there has been a push for member countries to use the national funds as another avenue for channeling disaster risk financing funds, but I'll hear from the experts on how their particular national funds and their own national experiences dealt with that. Obviously, when you establish national funds, there'll be some implementation and management issues and structures and governance structures that had to be established around those, because they become also carry with themselves fiduciary duties in managing the funds. Obviously, there's challenges over time in the landscape of disaster risk, and also in terms of response changes over time. And they might at times necessitate what I put there, resetting. Resetting might be actually revising the legislation and revising the capitalization mechanisms. There's a few things there over time, and I think the national funds need to be flexible enough to be able to adjust over time. But I don't want, like I said, I don't want to cover too much on that, and I actually allow the experts to come in and share with us their experiences. I'll stop there for now, Christian, and hand it back to you. Thank you.
Yeah, Vinaka, Lee, thank you, Lee, for giving us an overview of not only the earlier learning episodes, but also setting the scene for this particular learning episode. I think you have touched upon all important aspects of the theme of like today's virtual learning episode, and I'm sure that the eminent panel of speakers who are going to present on their country's particular strategy on risk retention and what are the instruments that they are using in the DRF space, which is gaining a lot of importance. And I would like to also thank all the members of the DRF Technical Working Group who have contributed in making this virtual learning episodes very participatory, and also giving a lot of inputs in structuring these virtual learning episodes. So on that note, I would like to invite the first panel speaker from Tuvalu, the Director of Climate Change Department, Director Pepetua. The floor is yours.
Thank you, Krishnan, and talofa to our participants on the line. I'm happy to be given the opportunity by organizers for this learning series, and I'm going to talk about the Tuvalu Survival Fund. The topic is around absorbing the cost of disasters and looking at risk retention instrument in the Pacific. The Tuvalu Survival Fund is a risk retention instrument that was established by the government of Tuvalu to meet specific needs and priorities of the government. Next slide, please. The full name of the fund is the Tuvalu Climate Change and Disaster Survival Fund. The fund was established in 2015, straight after the country was hit by Tropical Cyclone Pam in 2015. There are three objectives of the fund. One is looking at disaster recovery, disaster rehabilitation, as well as recognizing climate change adaptation needs of the country. It is the fund itself is governed by the Act. So that's the legislation that we have. We have an Act as well as the regulation. The operationalization of the fund is supported by the property registration system. This is a system where government has recorded and registered all properties, and this is referred to buildings, houses and buildings on all islands of Tuvalu. It is then the fund have a methodology which helps calculate the extent in which government assistance will be provided to affected buildings or affected houses. The fund itself was established based on the experience of government in setting up the Tuvalu Trust Fund. The Tuvalu Trust Fund, it is invested offshore, and as well, based on that experience, the Tuvalu Climate Change Survival and Disaster Survival Fund, or shortened to TSF, the Survival Fund, is also invested offshore. However, it has an operational account that is established here at the local bank on Funafuti. Next slide. The fund has provided, is meant to provide immediate financial support to houses destroyed in cyclones. However, over the years since its establishment, it has looked into houses that have also been destroyed or damaged by fire incidents, as well as other disasters that may occur. It provides the support, so it has procedural guidance in which there is a committee of the fund in terms of the governance. The committee is responsible of making decisions, looking at assessment reports, damage assessment reports, before they make recommendations to the board. So there is a board for the fund that makes approval, authorize any payments before it goes to the trustees of the fund that will sign on the checks for payout. There are two aspects in which support is provided. One is through cash payment, and another form is through building materials. It is important to note that Tuvalu does not have a insurance mechanism in place in the country. So the Tuvalu Survival Fund serve to provide immediate support required by citizens to rebuild their house in the near term. Government assistance determined based on the damages or the extent of damages on properties. And as I mentioned, there is a damage assessment team that is responsible of doing the assessment after any event. And that report, that assessment report goes through to the committee, which will then make recommendations to the board. The Tuvalu Survival Fund, it is triggered by, at the meantime, it is triggered by a state of emergency. So for any cyclones that hit Tuvalu, but government does not declare state of emergency, does not eligible to use the survival fund. But there are discussions, over the years of experience of operationalizing the Tuvalu Survival Fund, we have realized the need to relook at the trigger points. What are other trigger points that we will need to put in place, not only to rely on the state of emergency, but the intention to provide actual support or timeliness support to citizens. So the Tuvalu Survival Fund is a financial instrument in addition to other financial instruments in the Pacific that Tuvalu have access to. For instance, the World Bank, KDDO, as well as the ADB disaster resilience financing. Those financing received by the government is then channeled through the Tuvalu Survival Fund to provide that immediate support and to use the established mechanisms and guidelines to process the eligible support to be given to citizens. So overall, in a nutshell, that is what the Tuvalu Survival Fund, it has supported the country since its establishment in 2015. We have go through TC ULA in 2016 and the recent TC Tino in 2020. And government supported specifically on houses, on damages on houses and buildings have come from or go through the process that has been put in place for the Tuvalu Survival Fund, the resources that are in there. Currently, the fund sits at around 9 million, and it is currently only being financed by government. There are opportunities that we are looking at of encouraging donors to contribute to the fund in the near future. Next slide. I wanted to finish up my presentation to give you a drone shot of the islands of one of the islands of Tuvalu. It is a low lying, so the impacts that can be faced by infrastructure, given the limited land and its closeness to the ocean, can really severely impact the houses and buildings on each island. This is one island in the northern part of Tuvalu, but you can see there just by looking at the photo how vulnerable the island is to cyclone storm surges that may incur during our cyclone season. Thank you for your attention.
So thank you very much, Director Pepatua. I think it was a very, absorbing and intense presentation, and I think the country has done well to set up this particular risk retention mechanism. Of course, there are certain other issues that will come, as you mentioned, about when does it trigger, like an emergency has to be declared for it to be triggered, whether it serves the purpose for the communities. All those things can be discussed later in our Q&A session. And I'm sure that we will have participants posting questions, and I also have a few questions for you at the end of this presentation. But in the meanwhile, I would like to invite the other speaker for this particular session, Miss Litiara from Samoa's Ministry of Finance, to talk about that country's experience with risk retention instruments and what Samoa is doing to prepare itself for extreme weather events. Thank you. So the floor is yours.
Yeah, thank you, Krishnan. So I've been asked to speak on one of Samoa's disaster risk financing instruments, and this is the Asian Development Bank's policy-based contingent disaster financing. So the ADB's CDF is one of Samoa's key disaster risk financing instruments. The timeliness of disaster response is important to limit the negative impacts of disasters. So from the government's perspective, the speed of the disaster response is important to limit the overall response costs and provide much needed support to the national budget and from there to the population affected. Samoa has had policy-based operations or budget support for over 10 years for its public finance management reforms. And the climate and disaster pillar was included in the last 5 years, given the vulnerability and the impact of climate change and disasters to our smaller economies. So Samoa was able to take up or take part in Asian Development Bank's policy-based contingent financing when it was first set up in 2017. And like the GET TDO that Pepetua mentioned, it is a quick dispersing and flexible source of financing. So as with the normal budget support or policy-based operations, the key feature is that it enables processing and essential policy dialogue and reforms to be completed before an event occurs, with disbursement made upon satisfaction of pre-agreed disbursement conditions. So while the eligibility to withdraw the funds is based on the achievement of prior actions in a policy matrix, the actual withdrawals will only be triggered after the government declares a disaster or emergency. And this was in the first stage after a natural disaster. So the government can decide to withdraw all or parts of the funding that that they have according to the government's assessment or the initial damage assessment of an event's severity and the need. So in 2020, when we were affected by the COVID, we were able to discuss and agree with the Asian Development Bank to include health policy actions. And as a result, the CDF was triggered to support the COVID-19 preparedness and response. And given the timely and the quick disbursements, the funds were received within a week of the government's request. So these disaster risk financing instruments, they all come under the Public Finance Management Act and come through general budget support. And given that, and from experience, the government, you should be able to know the process and have all your documentations just in case. So when the severity of an event and the funding or support is needed, all your documentation is there to enable a quick response from, in this case, the Asian Development Bank, and the funds would be quickly received. So that has been our experience with the Asian Development Bank contingent disaster financing. We've been able to draw on that twice, first in 2020 and then just recently in 2022. So I think that's it from me, but I'll look forward to any clarifications needed or to answer any questions. Thank you.
Yeah, thank you very much, Tara. I think we heard about two different perspectives. One about the Tuvalu Survival Fund, and the other one where Samoa has been a beneficiary or utilizing the ADB facility. Both are important instruments, but at the same time have their own distinct features and differences. So thank you both for your enriching presentations. We have a few questions in the chat box, and I think we can start taking them. I also have a few questions that were posed by others that I have as a list. So let me go to the first question that was asked by Lee. Any indication of the amount that has been paid out over time from the Tuvalu Survival Fund? Director Pepetua, you did indicate that there was 9 million capitalized in the fund. What has been the amount paid out so far?
I can respond to that question, or do you want to take a few more questions and then allow us to do that? Just some guidance from you before I can proceed.
I think you can probably take these questions. One is what has been the payout and the average payouts done to beneficiaries or the communities, and the pushback from donors for not contributing to the survival fund. I think you can probably respond them together.
Okay, thank you, Krishnan. Okay, so initially, based on the expenditure that we have done to date for the two disasters since its establishment, so the 2016 of TC Ula and 2020 of TC Tino, we were looking around 1.6 million that has expended to citizens who got their houses destroyed during those two events. The average payout, it's around 3,000 Australian dollars, with the maximum that we have paid out, it's around 16,000 Australian dollars. Some of the pushback that we have seen, or not really pushback from donors, but I think it's throughout these years, we haven't been able to encourage donor contribution or investment into the fund. One is mainly the lack of marketing from our end, from government, of marketing of the Tuvalu Survival Fund, and it's something that has that the government is looking into promoting in that aspect. And the second part, based on a few donors that we have had the opportunity to converse with, and also getting to them or getting them to understand why we had set up the Tuvalu Survival Fund. Their main point that has stressed to us is the lack of clarity in the process, and one of that leads from the lack of practical operationalization of the fund, because we have just started, and as I mentioned, there are only two events And we have learned over these two events what are some of the gaps of the our existing procedures that we have in place and what can be improved. So we realized that there is a need to improve on procedural, on how we do assessments. We do a clearance for board approval. So these are some of the things that we are working at the moment to improve the setup of the fund so that it can be, it provides an environment for donors to invest in.
Yeah, thank you very much. I also have a follow-up question on your responses. So, what has been the average time in these two past events for actually making these payments? You said on an average about 3,000, and there are cases where you paid 16,000 Australian dollars. Both in 2016 like event and 2020 event. How long did it take for these payments to happen?
Yes, in 2016, because the fund, that the setup was still new then, and it is the first event, it took us about 6 months. We were hoping to complete the assessment at the first few weeks, taking into account or noting that the team from the capital, from the office, will need to travel to the out islands. This travel can take more than 24 hours to get there to the site, do the assessment, and then come back to the main Funafuti to carry out reporting. The prolonged process then has been improved over the years, and in particularly the recent TC Tino in 2020, where we were able to mobilize support in 2 to 3 months. We were able to complete reporting, push through reports through the board, and was getting approval to pay out that. But there are always fallout issues from the first payout. So we since 2020 and last year in 2021, we are still going through all the fallouts from or the miss out properties that people can that can claim for or request for assistance from government. But I can say that we have improved over the two events on the average time to provide the assistance to needed or to eligible citizens.
Yeah, so like, thank you, Director. That's that's really good to hear, and it's good to know that you are improving as you gain experience. So there's one question from Stephanie which asks about the revision of the trigger points that you mentioned, and also to consider damages that need not necessarily trigger a declaration of state of emergency. Is there anything in the pipeline for this, for revising the trigger points, as well as looking at natural disasters that necessarily are not leading to declaration of emergency?
Certainly, good question, because we have actually experienced that, and we have some examples of that. One is on storm surges, which not necessarily trigger the state of emergency. So one of the area that we have looked at, and it will be something that the Secretariat of the Fund, which is managed by the Climate Change Department, is going to propose to the board for consideration. And that is to set up an envelope within the fund that looks at contingency financing for any event that does not trigger state of emergency. And noting that this is only that the TSF at the moment is limited to houses and buildings. So we are also looking at some of the disasters, the events that destroy houses, destroy buildings, and what sort of support that should provided by government, immediate support that should provided by government to those citizens. So one of the initial initiative that we are looking at is to be proposed to the board before the end of this year, to set up an envelope in the fund to cover the immediate contingency financing for those events that does not trigger state of emergency.
Yeah, so thank you very much. That's indeed very progressive. I have another question this time. I think it's posted by Jale, and this is for both. So any experience on an inclusive DRR budget for Tuvalu? And I also had a similar question, saying that what is the level of community participation while setting up such funds or such instruments, which are ultimately meant for the benefit of the communities affected. So are these budgets or are these funds inclusive enough? So I would request Samoa to answer this first, and then probably we can get some inputs from Tuvalu as well.
Okay, thank you for the question. Firstly, in the Samoa has a reserve fund in the budget, which is 3% of the annual expenditures. This is what we can use for smaller, more frequent events. But for the first time in this current financial year, the government was able to allocate specific lines for the key response agencies in the events of a disasters. In the communities, they have all sorts of plans, risk-based plans, also community and disaster management plans. In the new financial year, we are moving towards having more ownership of communities in their developments, inclusive of climate and disaster risks included in their developments, with the funding to enable them to implement their priorities.
Yeah, right. Thank you. So that's good to know that the community is involved. I will pose a couple of questions while waiting for other participants on the virtual participants to post questions on the chat box. So one of the examples is like, again, being in the subject of like community participation, we know there are experiences of community-based savings groups that are used for risk retention at local level. These are in many African countries, and closer home, I at least know of experience in the Solomon Islands, where there are a lot of community-based savings groups that actually create a savings pool within the community for immediate disasters. That includes both exposure to natural hazards as well as certain extreme life cycle events. Are there any such community-based savings models that are used at that level for tackling risk, for tackling immediate payments or risk whenever there is an extreme event in any of these two countries, Samoa, Tuvalu?
Thank you, Krishnan. So firstly, on the question on the inclusiveness of those instruments that have been set up. With the TSF, as I mentioned, it was established in 2015 after the country was devastated by tropical cyclone Pam in 2015. We see the need for immediate response, and that was something that was came out during the assessment period from communities in all islands. So that it was then set up to provide that support to all citizens. In terms of the question related to government specific inclusive DRR budget, that is something that government is still working on it. It has started some scoping study looking at how best to reflect a budget support on specifically not only on DRR but also on climate change. So it's something that it's in the pipeline for government to look at, but it is important. I guess the important part is to ensure that the support that are being prepared by government can tailor towards community needs. Their participation in the planning process is of course paramount important, but it is also therefore important for us to look at what really is required for resilience development, because it is the other aspect to look into, not only for government to continue to provide the resources as they needed by communities, but how communities can utilize the resources that be given to them to build resilience so that it can be improved their adaptive capacity over time.
Yeah, that's an excellent point. We have another question. This time it's from Mary. Is there any targeted funding for women, especially for recovery support for informal livelihoods? And this is addressed to both panelists. I would request Litara to go first. Is there any targeted funding for women that is there under any of your instruments?
No, the funding comes through budget support, and based on the initial damage assessments, the resources are targeted towards where the support is very much needed. But but we also have programs which mainstream the climate and disaster risks, which also works with informal groups that include women's groups. So in that sense, everyone, including women who needs the support, we try to address that need.
Yeah, so I have a follow-up question on that. So how does the fund ensure that it is efficient, speedy, transparent, and accountable distribution of finance? I know that if you're largely using this ADB contingent fund, the money comes on a basis of a particular compliance with the policy matrix that you mentioned, and the money comes to the Treasury or to the Ministry of Finance. Then after that, how is it done in a fast and efficient manner so that the affected people get the funds in a timely manner and also in a very transparent manner?
The key attraction of these, for example, the CDF is quick dispersing to governments. Governments, we don't just set up policies or programs when something happens. We have ongoing priorities and programs that's addressing our resilient development priorities. So the support to the budget, initially what is needed in the aftermath of a disaster, for example, cyclone, is the debris removal and restoration of essential services, basic utilities. In the aftermath also, we have the emergency centers to shelter people that may be affected is activated. So the initial support is targeted towards those needs. And then as the initial assessments come in and discussed and in the National Disaster Committee and Council, then the support would go towards those identified with the most needs. So usually the funding is in the times of shocks or in the times of so they're usually one-off or very short-term payments.
Right.
And in addition to that, not only cash payments, but the tools and for example, planting materials, shelter materials. We also have a shelter financing for the most vulnerable, which was set up under the COVID response, but it's still ongoing because there is an ongoing need for that, given the impact on people's income during these challenging times.
Yes, thank you. There is another question from Cook Islands, and this time it's for Pepetua. So is the funding support towards the vulnerable, I mean, those affected, is it one-off or is it done over a period of time? I mean, like you did mention the quantum of payments. So is it a one-off payment or is it done over a period of time or continuous? So are you online, Pepetua? You're muted. Hello?
Krishnan.
Yes.
Krishnan, I think Pepe has replied to that question. I think he mentioned it's a one-off payment with regards to the support they provide for damaged houses. Thank you.
Okay. Right. I also note that we are about to run out of time, and we should give both speakers 2 minutes to give their final thoughts, and then we can wrap up this session. It's been quite engaging, and that's why we had a lot of questions, and we are running out of time. So in the interest of time, any last thoughts or any new ideas that both Samoa and Tuvalu would like to pursue? So Samoa first and Tuvalu next. Thank you.
Okay, thank you. So just like to end with that different financing instruments also have a corresponding cost associated with them. So therefore it's also important for government to assess this and see the most cost-effective financial instruments to finance response or in the time of need. So while speed matters for relief and early recovery, we also know that not all financial resources are needed all at the same time or have to be pre-arranged, like some of the disaster risk financing instruments. Yeah, thank you.
Do we still have Pepe online? If you're online, your thoughts, please. I think she's dropped off.
I think she's not online anymore, Krishnan.
Yeah, okay. So I think we are also about just a minute away from the close. And if there are any more questions, you can, the participants can email them and we will get the response from the respective speakers or from other experts within the group here. This has been quite an engaging and absorbing session on risk retention. We heard the experiences of the various funds that are available at the macro level, both in Samoa. Both in Samoa and in Tuvalu. Both have different structures. One is financed entirely by the Asian Development Bank and is triggered based on certain conditions, as well as deployed on the government meeting certain policy initiatives or policy matrices that are pre-agreed with the government and ADB. Then in the case of Tuvalu, it is an exclusive mechanism like a trust fund that the government has set up with its own finances. There's no donor support. The donor supports are welcome. It has been a learning process for both of them in terms of deployment of funds from both these facilities to meet the contingencies, one during COVID and one during two major extreme weather events that has happened. And Tuvalu is actually considering to expand the scope of the deployment of funds, including looking at specific trigger mechanisms that can be linked to other natural perils that the country is exposed to. This also means that there should be a lot of technical inputs that can go into it. The collective wisdom or collective experience of the members of the PRP and other development partners are of course really crucial in making this happen. As we heard today, disaster risk financing is a combination of several instruments that each country has to contextually strategize and use based on its fiscal capacities, as well as its vulnerability and risk exposure, and also in terms of how effectively these funds can be accessed and managed. We heard both speakers speak about risk retention and this has been, like quite a revelation for me also, especially the Tuvalu like survival fund, where I strongly feel that more funding flows can happen. I'm just trying to see that when there can be a large GCF funded project in the country on coastal adaptation, part of that could have been, there could have been some way in which it could have been flown into this. I mean, I think I'm sort of preempting myself. It certainly needs more discussions. But I think we have hit the time. So thank you very much, both Litara and like Pepetua, for your valuable insights, your time, and your contributions. Thank you also to all participants for taking your time. And the virtual learning episodes are really proving to be quite successful, as seen from the engaging participation, the quality of questioning, as well as the number of participants and the regularity of participation. On that note, I would like to once again thank the organizing team, as well as the participants and the speakers for this session. Vinaka.
Thank you, everyone. Naka.
Thank you, Krishnan.
Thank you, moderator.
Thank you. Thank you, everybody.
Thank you, everyone.
Thank you.
Thank you, Kakite.
Thank you, Litara and Pepetua, sorry.
Okay.